Have you ever wondered why so many traders dream about making millions, yet end up losing the very money they work so hard to earn? Think about it. The moment your account grows a little, something changes inside your mind. You stop thinking about making good decisions, and you start thinking about making big money. Suddenly, every trade feels like it has to change your life. Every candle feels personal. Every small pullback feels like an attack. Your heart races. Your palms sweat. You move your stop loss because you don't want to admit you're wrong. You double your position because you're convinced the market owes you a comeback. And before you know it, one oversized trade wipes out weeks, sometimes months, of hard work. Sound familiar? Here's the uncomfortable truth that most trading channels will never tell you. The market doesn't care how badly you want financial freedom. It doesn't reward confidence. It doesn't reward courage. It doesn't even reward intelligence. It rewards discipline. It rewards patience. It rewards the trader who knows when not to risk everything. Let me tell you something. The biggest reason most traders never become consistently profitable isn't because they have a bad strategy. It's because they trade too big. They believe bigger positions mean bigger profits. They believe taking more risk means reaching success faster. But what if everything you've been taught about thinking big is actually keeping you broke? What if the fastest way to grow your account is to stop trying to grow it so fast? Imagine sitting in front of your charts with complete peace of mind. Imagine placing a trade without your heart pounding out of your chest. Imagine watching price move against you without feeling panic because you know one loss cannot destroy you. Imagine finally thinking clearly instead of emotionally. That sounds impossible to many traders because they've never experienced what it feels like to trade small enough that fear disappears. Understand this. The market is not your enemy. The market is a mirror. It reflects your impatience. It reflects your greed. It reflects your need to be right. It reflects your fear of missing out. Every oversized position exposes another weakness you didn't know you had. This is not about the market. This is about you. And once you truly understand that, everything begins to change. The traders making millions over time are rarely the ones trying to make millions today. They protect their capital. They protect their confidence. They protect their mindset because they know something that struggling traders don't. Small positions create big opportunities. Small risk creates emotional freedom. Emotional freedom creates better decisions. Better decisions create consistency. And consistency is what eventually creates extraordinary wealth. It sounds simple, but your ego will fight this idea every step of the way because your ego wants excitement while your future self needs discipline. That's the battle every trader faces. Not trader versus market, you versus you. In this video, you're going to discover why trading smaller is one of the most powerful habits professional traders develop. How reducing your position size can dramatically improve your decision making. Why protecting your capital is more important than chasing quick profits. How consistent small wins build the mindset required for long-term success. And why the traders who appear to move slowly are often the ones who ultimately build the largest fortunes. By the end of this video, you'll never look at position sizing the same way again. You may even realize that the biggest thing holding back your profits was never your strategy. It was the size of your trades. Stay with me, because what you're about to hear could completely transform the way you think about risk, money, and trading forever. Chapter 1. The dangerous lie that bigger trades mean bigger success. Let me ask you something. Who convinced you that the only way to become rich in trading was to risk more money? Was it the screenshots on social media? Was it the trader showing a $20,000 profit in a single day? Was it the videos promising financial freedom in 30 days? Somewhere along the way, you started believing a dangerous lie. You began to believe that success in trading is measured by the size of your positions, and that single belief quietly became the foundation of every emotional mistake you've ever made. Think back to your biggest loss. Was it really caused by your strategy? Or did it happen because you traded larger than your emotions could handle? Most traders don't lose because they can't predict the market. They lose because they cannot control themselves once real money is on the line. The moment the position becomes too big, logic disappears, patience disappears, fear takes over, greed takes over, ego takes over. Suddenly, you're no longer following a trading plan. You're following your emotions. And emotions have never made anyone consistently profitable. Understand this. The market doesn't become harder because your position size increases. You become weaker. That's the difference. The chart hasn't changed. The candles haven't changed. The probabilities haven't changed. Only your emotional response has changed. A $5 fluctuation suddenly feels like a personal attack. A small pullback feels like the beginning of a disaster. Every tick against you feels unbearable because your risk is larger than your mind can comfortably accept. You stop seeing opportunities. You start seeing threats. You start acting like a trader. You start acting like someone trying to survive. That is the moment your account begins to shrink. Let me tell you something most beginners never realize. Professional traders are not emotionally stronger because they were born different. They appear calm because they refuse to put themselves in situations where emotions control their decisions. They understand that confidence doesn't come from risking more. Confidence comes from knowing one single trade cannot destroy everything they've built. That is why professionals survive while amateurs constantly restart from zero. The amateur wants one massive winner. The professional wants 10,000 disciplined decisions. The amateur dreams about becoming rich this month. The professional focuses on staying profitable for the next 20 years. Those are two completely different mindsets. And only one of them creates lasting wealth. Here's what your ego whispers every time your account grows. Double your size. This is your chance. One big trade and your life changes forever. It sounds exciting. It sounds logical. It even sounds courageous. But it's nothing more than greed wearing the mask of confidence. Greed always speaks with certainty. Discipline speaks with patience. Greed tells you to accelerate. Discipline tells you to slow down. Greed tells you that bigger is better. Discipline reminds you that consistent is better. The question is, which voice have you been listening to? Because that voice is shaping your financial future every single day. The irony is almost painful. The trader who risks the most often earns the least over time. Why? Because oversized positions create oversized emotions. Oversized emotions create impulsive decisions. Impulsive decisions create unnecessary losses. Then comes revenge trading. Then comes self-doubt. Then comes the desperate search for another strategy, another indicator, another mentor, another shortcut. But none of those things solved the real problem because the real problem was never the strategy. The real problem was believing that making more money required taking more emotional risk. That's the illusion that traps millions of traders. Imagine two traders looking at the exact same setup. One trader risks an amount small enough that losing won't affect his confidence. He follows his plan, he accepts the outcome, he moves on. The second trader risks so much that every candle feels like life or death. He watches every tick. He questions every decision. He exits early when fear appears. Then he watches price move exactly where he originally expected. Frustration turns into anger. Anger turns into another oversized trade. One trade becomes two, two become five. By the end of the week, it isn't the market that defeated him. It was his inability to manage the emotional weight of his own position size. The market simply revealed what was already inside him. It showed him his impatience. It showed him his fear. It showed him his greed. It showed him the truth. This is why the biggest breakthrough in trading really happens when you discover a better strategy. It happens when you stop trying to force extraordinary profits from ordinary opportunities. It happens when you realize that protecting your mind is just as important as protecting your capital. Because once your emotions become unstable, your strategy no longer matters. Your knowledge no longer matters. Your experience no longer matters. Everything becomes filtered through fear and hope instead of logic and discipline. And that is the real cost of trading too big. It doesn't just damage your account, it damages your ability to think clearly. This is where everything begins to change. The moment you stop asking, how much money can I make from this trade, and start asking, can I execute this trade without emotional interference, your entire trading identity starts to transform. Success stops being about excitement. It becomes about execution. It stops being about proving yourself right. It becomes about protecting your future. And once that shift happens, you begin to understand a truth that separates professionals from everyone else. Bigger positions don't create bigger traders. Bigger discipline does. But discovering how to build that discipline requires something most traders spend their entire careers avoiding. And that's exactly where we're going next. Chapter 2, Why Small Positions? Silence fear and reveal clear thinking. Picture this. You place a trade that perfectly matches your strategy. The setup is clean. The risk is defined. The probability is on your side. For the first few minutes, everything feels normal. Then the market moves slightly against you. Nothing unusual. Just ordinary price movement. But suddenly your breathing changes. Your eyes lock onto every candle. You refresh the chart every few seconds. Your confidence begins to disappear. You start thinking, maybe I should get out now before it gets worse. Then, almost the moment you exit, the market turns around and moves exactly where you expected it to go. Sound familiar? Here's the painful truth. The market didn't trick you. Your position size did. Your trade wasn't too difficult. Your risk was too heavy. And when your mind is carrying more emotional weight than it can handle, fear always speaks louder than logic. Understand this. Fear is not created by the chart. Fear is created by the amount you believe you can lose. That's why two traders can look at the exact same market and experience two completely different emotional realities. One remains calm because the outcome of the trade will not change his life. The other is overwhelmed because he has attached too much importance to one single position. The market hasn't changed, the psychology has. And psychology always wins. This is where everything starts to shift. When you reduce your position size, something incredible happens. Your mind becomes quiet. The endless noise begins to fade. You stop imagining catastrophic losses every time the market retraces a little. You stop feeling the urge to interfere with every trade. Instead of reacting emotionally, you begin observing objectively. You start seeing the market instead of seeing your money. That difference is enormous. Because the moment your attention moves away from dollars and back to decision making, your execution improves almost automatically. Let me tell you something that many struggling traders never understand. You cannot think clearly while protecting your ego. Those two things cannot exist at the same time. When your position is too large, every losing trade feels like a personal failure. You aren't just losing money, you feel like you're losing your identity. You desperately want the market to prove you right because your confidence depends on it. That's why you move stop losses. That's why you average down. That's why you hold losing trades longer than you should. You aren't managing risk anymore. You're protecting your ego. But small positions remove that emotional trap. They remind you that being wrong is simply part of the business. They allow you to accept losses without questioning your worth as a trader. That's emotional freedom. And emotional freedom is where disciplined execution begins. Think about professional athletes. The greatest basketball player doesn't panic after missing one shot. The greatest quarterback doesn't retire after throwing one interception. They understand that success is built over hundreds and thousands of decisions, not one single moment. Trading is exactly the same, yet most traders treat every position as if their entire future depends on it. They give one trade the emotional weight of a championship game. No wonder they crack under pressure. No wonder they abandon their rules. No wonder consistency feels impossible. The pressure they're carrying was never necessary in the first place. Small positions remove that pressure. They allow you to think like an investor instead of a gambler. They allow you to focus on execution instead of outcomes. They allow patience to replace panic. And patience is one of the most profitable skills any trader can develop. Notice what happens when your position is comfortably small. You let your winners breathe because you aren't desperate to lock in profits. You respect your stop loss because accepting a planned loss no longer feels unbearable. You wait for quality setups because you don't feel the need to force action every hour. Suddenly, your entire behavior begins to resemble that of a professional, not because your strategy changed, but because your emotions stopped interfering with it. It showed you your fear, it showed you your attachment, it showed you the truth. The truth is that most traders don't need better entries. They need calmer minds. And calm minds are built through controlled risk, not oversized ambition. Here's another illusion that keeps traders trapped. They think trading small means thinking small. Nothing could be further from the truth. Trading small is actually thinking bigger than most people ever will. Why? Because you're making decisions based on your future instead of your emotions. You're protecting tomorrow instead of chasing today. You're building a career instead of chasing a lucky payday. That's long-term thinking. That's how professionals survive market crashes, losing streaks, unexpected volatility, and emotional setbacks. They understand that survival is a competitive advantage. Every day you stay in the game with your confidence intact, your edge has another opportunity to play out. Every unnecessary blow to your account delays that opportunity. Every oversized trade steals time from your future success. Let me tell you something. Confidence is not built by winning big trades. Confidence is built by keeping promises to yourself. Every time you respect your position size, you reinforce discipline. Every time you honor your stop loss, you strengthen trust in yourself. Every time you choose patience over impulse, your identity begins to change. You stop seeing yourself as someone trying to get lucky. You begin seeing yourself as someone capable of professional execution. That identity is worth far more than any single winning trade because identities create habits, and habits create results. This is why the traders who seem almost boring are often the ones quietly building extraordinary wealth. They aren't chasing adrenaline. They aren't trying to impress anyone. They aren't posting giant profit screenshots every day. They simply keep making intelligent decisions while everyone else is fighting emotional battles. Day after day, week after week, year after year, eventually the difference becomes impossible to ignore. The emotional trader burns out. The disciplined trader compounds. And that's the secret hidden in plain sight. The smaller your emotional burden becomes, the greater your ability to think clearly. The greater your clarity becomes, the better your decisions become. The better your decisions become, the more consistent your results become. But consistency alone isn't the final destination. Because the greatest advantage of trading small isn't just emotional control. It's something even more valuable. It gives you enough time to stay in the game until your edge finally has a chance to transform patience into lasting wealth. And that's exactly where the journey leads next. Chapter 3, The Hidden Power of Surviving Long Enough to Win. Imagine waking up tomorrow and discovering that your trading account is gone. Not because the market became impossible to trade, not because your strategy suddenly stopped working, but because one emotional decision erased months, maybe even years, of effort. Now ask yourself this question. What would hurt more? Losing money or realizing you never gave yourself enough time to become the trader you were capable of becoming? That is a tragedy most traders never see until it's too late. They don't fail because they lack talent. They fail because they ran out of opportunities. They treated every trade like it had to be the one that changed their life. And in doing so, they guaranteed they wouldn't be around long enough for consistency to work its magic. Understand this. The greatest edge in trading isn't intelligence. It isn't speed. It isn't finding the perfect strategy. The greatest edge is survival. Because only the trader who survives gets another chance tomorrow. The trader who protects capital gets another chance next week. The trader who stays emotionally stable gets another chance next month. But the trader who blows up the account loses something far more valuable than money. He loses time. And time is the one resource the market never gives back. Let me tell you something that changes everything once you truly understand it. Trading is not a sprint to one big payday. It's a marathon of thousands of small decisions. Every single trade is only one sentence in a very long story. Yet most people try to write the entire story in one chapter. They become impatient. They want proof that they're destined for success right now. They want instant validation. They want instant wealth. And because they cannot wait, they begin forcing outcomes that were never meant to be forced. That's when discipline disappears. That's when destruction quietly begins. Think about nature for a moment. The strongest oak tree didn't become massive overnight. It survived storms, it survived droughts, it survived seasons that looked like failure. Year after year kept growing because it remained rooted. Your trading career works the same way. Every losing streak is a storm. Every drawdown is a difficult season. Every emotional challenge is testing your roots. If your entire account depends on surviving one storm, you were never building a forest. You were planting a fragile branch and hoping it became a tree overnight. Real growth doesn't happen that way. Wealth doesn't happen that way. Mastery certainly doesn't happen that way. Here's what separates professionals from everyone else. Professionals understand that no single trade deserves the power to define their future. They expect losses because losses are part of probability. They don't panic when they experience a difficult week because they know one week means almost nothing in the context of thousands of future trades. Their confidence comes from process, not recent results. That's why they remain calm while everyone else falls apart. They understand a truth that amateurs constantly ignore. If you stay in the game long enough while protecting your capital, probability eventually begins working for you instead of against you. But probability only rewards those who survive long enough to experience it. Let me ask you another question. How many potentially great traders quit just before everything was about to click? How many people abandoned a winning strategy after 10 losses in a row, never realizing the next 20 trades would have recovered everything? How many accounts disappeared because someone believed one losing month meant they were incapable of success? The answer is heartbreaking, more than you could ever imagine, not because the market defeated them, but because impatience convinced them the journey was already over. This is where everything changes. The moment you stop measuring success by today's profit and begin measuring success by your ability to keep playing tomorrow, your priorities shift. Suddenly, preserving capital becomes exciting. Avoiding unnecessary risk becomes a victory. Following your rules becomes more satisfying than chasing quick money. Why? Because you're no longer obsessed with winning every battle. You're focused on winning the entire war. That's the mindset professionals develop. That's the mindset that quietly builds extraordinary fortunes while everyone else is searching for shortcuts. It showed you your impatience. It showed you your need for certainty. It showed you the truth. The truth is that every successful trader has one thing in common. They stayed in the game long enough for experience to replace emotion. They stayed in the game long enough for discipline to become automatic. They stayed in the game long enough for confidence to be earned instead of imagined. None of those things happen quickly. They are built trade by trade, day by day, decision by decision. That's why protecting your account is never just about protecting money. You're protecting your education. You're protecting your future opportunities. You're protecting the version of yourself that doesn't exist yet, but is slowly being created through every disciplined action you take today. Most people think risk management limits profits. In reality, risk management extends careers. And careers create wealth. A trader who earns modest, consistent returns for 10 years will almost always outperform someone who experiences spectacular gains followed by devastating losses. Why? Because consistency compounds while emotional destruction resets everything back to zero. Every time you blow up an account, you don't simply lose dollars. You lose confidence. You lose trust in yourself. You lose momentum. Then you spend months trying to rebuild what never needed to be destroyed in the first place. Imagine how much further ahead you'd be if your goal had always been survival instead of excitement. Imagine how different your trading would feel if every decision came from patience instead of urgency. That's the hidden power almost nobody talks about. Survival creates experience. Experience creates wisdom. Wisdom creates discipline. Discipline creates consistency, and consistency eventually creates the kind of wealth that doesn't disappear after one bad month. Let me tell you something you'll never forget. Every professional trader was once a beginner who simply refused to disappear. They had losing trades, they had frustrating months, they questioned themselves, they doubted themselves, but they protected the one thing that mattered most, their ability to come back tomorrow. Because tomorrow always offers another opportunity, but only to the trader who is still standing. This is why trading small is far more than a position sizing technique. It's a commitment to longevity. It's a declaration that your future matters more than today's excitement. It's a promise that no single trade will ever have permission to steal your dreams. And once you truly embrace that idea, something remarkable begins to happen. You stop chasing money, and without even realizing it, you begin building the habits that quietly attract it. That is where the next transformation begins. Chapter 4. How small wins rewire your brain for consistency. Have you ever noticed how one disciplined decision makes the next disciplined decision a little easier? It seems almost invisible at first. You follow your trading plan once, and nothing extraordinary happens. You take a small controlled loss, exactly as planned, and your account barely changes. You resist the temptation to revenge trade, and the world doesn't suddenly reward you with a huge winning position. In fact, it feels almost boring. That's why so many traders abandon discipline before they ever experience its true power. They mistake excitement for progress. They believe that if something doesn't feel dramatic, it can't be changing their future. But let me tell you something. The most powerful transformations in trading are almost always invisible in the beginning. They happen quietly. They happen inside your mind long before they ever appear in your account balance. This is where everything begins to shift. Every disciplined action is teaching your brain a new identity. Every time you respect your stop loss, you're telling yourself, I am someone who follows rules. Every time you skip an emotional trade, you're telling yourself, I don't need to chase opportunities because another one will come. Every time you keep your position size small enough to remain calm, you're proving that emotional control is more important than temporary excitement. These messages seem small. They seem insignificant, but your brain is always listening. Your habits are always watching. And over time, those repeated actions become your automatic behavior. That's why consistency is never created in one dramatic moment. It is built one disciplined decision at a time. Think about how bad habits are formed. Nobody wakes up one morning and suddenly becomes an impulsive trader. It starts with one emotional decision, one revenge trade, one oversized position, one ignored stop loss, then another, then another. Eventually, those actions become automatic. Your brain begins expecting emotional reactions because you've repeated them so many times. Now imagine reversing that process. Imagine replacing panic with patience. Imagine replacing urgency with preparation. Imagine replacing greed with discipline. At first it feels unnatural because your old habits fight back. Your ego whispers that you're being too careful. Your emotions tell you you're missing opportunities. You watch other people posting huge profits online and wonder if you're moving too slowly. But understand this. The people you compare yourself to are often showing you one exciting moment, not an entire career. You're comparing your long-term future to someone else's highlight reel. That's a battle you will never win. Let me tell you something most traders completely overlook. Your brain doesn't become confident because of money. It becomes confident because of evidence. Every time you keep a promise to yourself, you collect evidence. Every time you execute your plan exactly as intended, you collect evidence. Every time you remain calm during uncertainty, you collect evidence. Eventually, your subconscious begins believing a completely different story. Instead of saying, I hope I can be disciplined, it begins saying, this is who I am. That is a completely different level of confidence. It's no longer based on profits. It's based on identity. And identities are far more stable than emotions. Profits go up and down. Identity remains. That's why professional traders don't fall apart after a losing streak. Their confidence isn't attached to yesterday's result. It's attached to years of disciplined behavior. It showed you your habits. It showed you your patterns. It showed you the truth. The truth is that every trade is training your brain. Whether you reward impulsive behavior grows stronger. If you reward disciplined execution grows stronger. Your account is not simply reflecting your strategy. It is reflecting your habits. Your habits are reflecting your identity. And your identity is quietly shaping every financial decision you make. This is why small wins matter far more than people think. A small win earned through discipline is infinitely more valuable than a huge win earned through recklessness. Why? Because one reinforces a process that can be repeated. The other reinforces behavior that eventually destroys accounts. Many traders become addicted to lucky outcomes. They break every rule, make a fortune on one trade, and convince themselves they're becoming experts. But luck is dangerous when it rewards bad habits. Because the next time they break the rules, the market won't be so forgiving. Suddenly that confidence turns into confusion, then frustration, then fear. The cycle repeats because nothing inside them actually changed. They won money, but they didn't build discipline. And discipline is what creates lasting success. Imagine two traders after 1 year. The first trader experienced incredible highs and devastating lows. Some months he doubled his account. Other months he nearly lost everything. Every day felt like an emotional roller coaster. The second trader rarely had spectacular days. He simply followed his rules over and over again. His gains were steady. His losses were controlled. His emotions remained balanced. At first, the first trader looked more impressive. But over time, the second trader became unstoppable because consistency compounds in ways excitement never can. That's the hidden advantage of small wins. They don't just grow your account. They reshape your thinking. They teach patience, they teach humility, they teach trust. Most importantly, they teach you that success isn't created by one extraordinary decision. It's created by thousands of ordinary decisions executed with extraordinary discipline. This is where the identity of a professional is born. Not when the account reaches a certain number. Not when people start admiring your results. Not when you finally have a massive winning month. It begins the moment you choose process over emotion, discipline over excitement, and long-term consistency over short-term validation. From that point forward, every small victory becomes another brick in the foundation of an unshakable mindset. You no longer wake up asking how much money you can make today. You wake up asking whether you can execute your plan with excellence. Ironically, that's exactly when the money starts following you. Because the market rewards disciplined behavior over time, even if it doesn't reward it immediately. Delayed rewards are difficult for impatient minds to understand, but they are the language of every lasting achievement. The people who build extraordinary wealth are almost never obsessed with today's outcome. They're obsessed with becoming the kind of person who makes intelligent decisions every single day. And when that transformation finally takes place, something extraordinary happens. Your focus quietly shifts away from chasing profits, and without realizing it, you begin attracting them. That unexpected shift is where the next chapter begins, and it changes everything. Chapter 5. The moment you stop chasing money, money starts following you. What if the biggest obstacle between you and consistent profitability isn't the market, but your obsession with making money? That sounds completely backward, doesn't it? After all, you started trading to make money. You studied charts to make money. You spend hours analyzing setups to make money. Everything seems to point toward one goal, more money. But let me tell you something that almost every consistently profitable trader eventually discovers. The harder you chase money, the faster it seems to run away. And the moment you stop chasing it, something extraordinary begins to happen. Not because the market suddenly becomes easier, but because your decisions become smarter. You finally stop treating every trade like an emergency. You stop demanding that today's position pay for tomorrow's dreams. You stop forcing outcomes that should have been left to probability. And that's when your relationship with trading begins to change. Forever, think back to the first time you placed a trade. Before you understood profits and losses, before you became emotionally attached to your account balance, you were curious. You wanted to learn. You wanted to understand how the market moved. But somewhere along the way, curiosity was replaced by desperation. Every chart became a paycheck. Every candle became an opportunity you couldn't afford to miss. Every losing trade felt like your future was slipping away. Without realizing it, you stopped trading the market and started trading your financial fears. That's the moment your focus shifted away from execution and became trapped by outcomes. Understand this. The market rewards execution, not desperation. It rewards discipline, not neediness. It rewards traders who can patiently wait for opportunities instead of trying to manufacture them. But desperation has a way of making every mediocre setup look like the opportunity of a lifetime. That's why emotionally attached traders overtrade. They enter too early because they fear missing out. They exit too early because they fear giving profits back. They increase position size because they fear being left behind. Every decision is driven by fear disguised as ambition. Yet they call it confidence. They call it determination. In reality, it's emotional attachment to money. And emotional attachment clouds judgment every single time. Let me tell you something that may completely change the way you look at trading. Money is not the goal during a trade. Money is the byproduct of a well-executed process. The moment you sit down in front of your charts, your only responsibility is to make high-quality decisions. That's it. You cannot control whether this next trade wins or loses. You cannot control unexpected news. You cannot control market volatility. But you can control whether you follow your rules. You can control your patience. You can control your risk. You can control your mindset. Ironically, the traders who focus entirely on what they can control usually end up making far more money than those who obsess over what they cannot control. This is where everything changes. Imagine placing a trade without mentally calculating how much profit you could make. Imagine looking at a setup and asking only one question: does this meet my rules? Nothing else matters. Not the dollar amount. Not the excitement. Not the fantasy of buying expensive cars or quitting your job tomorrow. Just one simple question: does this trade deserve my capital? That single shift transforms everything because it removes emotional pressure from your decisions. Suddenly, you're no longer trying to predict the future. You're simply executing your edge. One trade, one decision, one disciplined action at a time. It showed you your greed. It showed you your impatience. It showed you the truth. The truth is that greed is rarely obvious. It doesn't always look like recklessness. Sometimes greed wears the mask of confidence. Sometimes it whispers, you've earned the right to risk more. Sometimes it says, this setup is different. Sometimes it convinces you that breaking your rules just once won't matter. But greed always has the same destination. It leads you away from discipline and toward emotional decision-making. And emotional decision-making always demands a price. The market collects that price without hesitation. That's why professional traders don't fall in love with profits. They fall in love with process. Because process is repeatable, process survives losing streaks, process builds confidence that isn't dependent on one lucky outcome. When you become process-driven instead of money-driven, losing trades stop feeling like personal failures. They simply become part of the statistical journey. Winning trades stop feeding your ego because you know they were never guaranteed. Everything becomes quieter, more balanced, more professional. Think about the greatest businesses in the world. Successful companies don't wake up every morning wondering if they'll make millions today. They focus on delivering quality, improving systems, managing risk, and serving customers consistently. The profits arrive because the process is strong. Trading is no different. Your trading plan is your business model. Your discipline is your management team. Your risk management is your financial department. Your emotional control is your leadership. If those things are healthy, profits eventually become the natural outcome. But if your only focus is today's paycheck, your business eventually collapses under emotional pressure. Here's something most traders never expect. The less emotional importance you place on any single trade, the more accurately you begin seeing opportunities. Your vision becomes clearer because fear no longer distorts reality. You wait instead of rushing. You observe instead of assuming. You respond instead of reacting. That's the hidden gift of emotional detachment. It doesn't make you careless. It makes you objective. And objectivity is one of the rarest advantages in financial markets. Let me tell you something you'll remember every time you open your trading platform. Money follows value. In trading, your value is not measured by how much profit you make today. Your value is measured by the quality of your decisions over time. Improve your decisions, and your results eventually improve. Improve your discipline, and your confidence eventually improves. Improve your consistency, and your wealth eventually improves. That's how professionals think. They understand that chasing profits is exhausting, but building excellent habits creates profits almost as a side effect. This is why the calmest traders often become the wealthiest. They no longer wake up hoping for miracles. They wake up committed to excellence. They no longer celebrate lucky wins. They celebrate flawless execution. They no longer fear losing trades because one trade has no power to define their future. That emotional freedom becomes their greatest competitive advantage. And when you finally reach that point, something remarkable happens. The market no longer feels like an opponent trying to defeat you. It becomes a place where disciplined behavior is quietly rewarded over time. That's the paradox almost nobody understands. The less desperately you need money from the market today, the more prepared you become to earn extraordinary amounts from it tomorrow. And once that realization settles into your mind, you're finally ready to think the way elite professionals think. Because the final transformation has nothing to do with making bigger trades. It has everything to do with becoming a completely different trader. Chapter 6. Think like a professional. Build big wealth by trading small. Close your eyes for a moment and imagine yourself 5 years from now. Not the version of you that is still searching for the next perfect indicator. Not the version of you hoping one lucky trade will solve every financial problem. Imagine the version of you who has already become consistently profitable. Picture yourself opening the charts with complete calm. No racing heartbeat. No fear of missing out. No desperate need for today's trade to pay every bill. You simply analyze the market, execute your plan, accept the outcome, and move on. It feels almost ordinary, almost boring. Yet behind that calm attitude is something extraordinary. Years of discipline, years of patience, years of refusing to let emotions make decisions. That future version of you didn't become successful because of one massive trade. That version of you was built one small, disciplined decision at a time. And that's the truth most traders spend years trying to avoid. They keep searching for a secret strategy when the real secret has been quietly waiting inside their daily habits all along. Understand this. Professional traders do not think differently because they have more money. They have more money because they learn to think differently. The transformation begins in the mind long before it appears in the account. Professionals don't ask, how much can I make today? They ask, how well can I execute today? They don't measure success by profits. They measure success by discipline. They don't wake up trying to prove they're smarter than the market. They wake up prepared to respect it. That's why they survive where others disappear. That's why they continue growing while emotional traders repeat the same painful cycle year after year. The amateur sees a winning trade and immediately imagines a luxury lifestyle. The professional sees the same trade and thinks only about proper execution. The amateur becomes emotionally attached to the outcome. The professional becomes committed to the process. The amateur fears being wrong. The professional fears abandoning discipline. Those differences seem small in the moment, but over hundreds and thousands of trades, they create completely different lives. Let me tell you something that might become the most valuable lesson you ever hear. Wealth is not created by extraordinary moments. Wealth is created by ordinary behaviors repeated consistently over an extraordinary period of time. That's true in business. That's true in investing, and it's absolutely true in trading. Every time you protect your capital, you increase your chances of future growth. Every time you reduce unnecessary risk, you increase your ability to stay emotionally balanced. Every time you remain patient while others rush, you're quietly separating yourself from the crowd. The crowd wants excitement. Professionals want longevity. The crowd celebrates huge wins. Professionals celebrate flawless execution. The crowd thinks in days. Professionals think in decades. It showed you your priorities. It showed you your habits. It showed you the truth. The truth is that the market has never been testing your intelligence. It has been testing your character. It has been asking the same question every single day. Can you remain disciplined when emotions are screaming at you to do the opposite? Can you stay patient when greed tells you to hurry? Can you accept uncertainty without trying to force certainty where none exists? Every trading day is another opportunity to answer those questions. And every answer shapes the person you're becoming. This is why trading small is so powerful. It gives you the emotional space to answer correctly. It removes the pressure that causes panic. It removes the ego that demands perfection. It removes the desperation that leads to impulsive decisions. Small positions don't make you weaker, they make you clearer. And clarity is priceless in an environment where emotional confusion destroys so many accounts. Think about every chapter of this journey. First, you discovered that bigger trades often create bigger emotional mistakes. Then you realized that smaller positions silence fear and allow clear thinking. After that, you understood the hidden power of surviving long enough for your edge to work. Then you saw how small disciplined actions slowly rewire your identity into that of a professional. Finally, you learned that the moment you stop chasing money, your decisions become good enough for money to begin following you. None of these lessons stand alone. They are connected. Remove one and the foundation becomes weaker. Build them together, and something remarkable begins to happen. You stop behaving like someone hoping to become profitable. You begin behaving like someone who already deserves consistent success. That shift changes everything. Here's the paradox that defines every elite trader. The more they grow their account, the less interested they become in taking unnecessary risks. Beginners believe confidence means increasing position size. Professionals know confidence means protecting everything they've worked so hard to build. They understand that success isn't fragile because it was built slowly. It was earned. Every dollar represents thousands of disciplined decisions. Every percentage of growth represents emotional control. Every milestone represents patience winning another battle against ego. That's why professionals rarely need to prove anything. Their results speak quietly for them. They don't chase validation because consistency has already given them something much more valuable than applause, and has given them peace. Imagine ending each trading day without regret. Imagine knowing that even if you lost money today, you still traded well. Imagine looking back over an entire year and realizing that your greatest achievement wasn't the size of your account. It was the person you became while building it. Someone calmer, someone wiser, someone patient enough to trust probability instead of emotion, someone disciplined enough to choose long-term freedom over short-term excitement. That's what real success looks like. It's not just financial. It's psychological, it's personal, it's permanent. Let me leave you with one final thought. Years from now, you probably won't remember your biggest winning trade. You won't remember the exact chart pattern or the perfect entry price. But you will remember the day your mindset changed. The day you stopped trying to get rich quickly and started trying to become the kind of trader who could stay profitable for a lifetime, because that was the day everything truly began. The market never promised you certainty. It never promised easy money. It never promised instant success. But it does reward one quality over time: relentless discipline. So the next time you open your charts, remember this simple truth. Trade small enough to think clearly. Think clearly enough to stay disciplined. Stay disciplined long enough to become consistent. And become consistent long enough to build the kind of wealth that no single emotional decision can ever take away. That is how professionals think. That is how professionals survive. And ultimately, that is how professionals win.